and his goodness and his grace and mercy. And just honor you, Superintendent, on tonight. And also, First Lady Simpkins, God bless you. The jewel of the rock, love you so much. To all of my family. And as Superintendent says, yes, it's my family. You're gonna always be my family, irrespective of where I'm at. And so we just praise God on tonight. And so we're gonna go ahead and just present this financial house in order PowerPoint to you on tonight. And God bless you again. So let's go ahead and let's see. Host disabled, I was gonna show. Let's see. I need to be able to just share my screen.
See, they still doing Bible study.
Okay, so there we go. Simpkins, as well as Lady Simpkins, because they truly do lead by precept and example. So just leaders that you can look up to. So we just thank God for both of them and thank them for the opportunity to be able to present this to you on tonight. So we honor these two amazing leaders who have a heart to serve the people. And as all of you can attest to, they're doing it and they're helping to build the kingdom of God. 1 Timothy 5:17 says, let the elders that rule well be counted worthy of double honor, especially they who labor in the word and doctrine. So we know that Superintendent and First Lady have a heart to serve, and they don't do this. They don't do lip service. They back it up. So we do honor these two amazing leaders on tonight. Hebrews 13:17, another scripture I want to honor them with by saying, obey them that have the rule over you and submit yourselves, for they watch for your souls. Truly, they are soul watchers. So we thank God again for Superintendent, Pastor, and First Lady Evangelist Sheila Simpkins. So your presenter, it says today, but it's this evening. Those of you that know me, you're my family. I love to serve in whatever capacity that I can. I am a licensed and health agent in about 8 states. I've actually got about 5 more states I'm going to be adding on there. I'm also the owner of RRR Credit Services. And my mission is educating, equipping, and empowering those who want a better life in whatever capacity that is. I love to do just that. And as Pastor said, married to Felix, my husband of 13 years. We have 3 wonderful children. And in my spare time, I like writing. Just published a new book early this year with some sisters. I love also spending time with my family and planning cruises. Oh my gosh, this is the longest I've been not on a cruise. And so Felix is like, I'm not going. I'm like, well, as soon as I can go, I'm going. So I love cruises. And so it's a little bit about me. So what we want to talk about this evening tonight, I'm coming to educate, equip, and empower you. And so we're going to talk about life insurance tonight, as well as credit. So those are the 2 things we're going to share with you. Let's talk about the importance of having life insurance. About 3.5 years ago, I got licensed, and really it was just to get licensed to help my family and friends on the side. And so it just broke my heart when I would see the GoFundMes and people trying to do car washes to try to bury a loved one. And so I want to talk a little bit about the importance of having life insurance, because truly you're in a position where you're providing peace of mind to your family and you're helping keeping your family secure. And tomorrow's not promised. We need to take care of tomorrow today, because as we know, tomorrow's not promised. It's not promised that we would even end this day alive. So while we have the breath in our body, we need to take care of tomorrow today. Hezekiah 38:1 says, in those days Hezekiah was sick unto death, and Isaiah the prophet, the son of Amos, came unto him and said unto him to get your house in order, because he was going to die. And those of us know the story. He pleaded with God, and begin to share about how he had done so much for God. And God added another 15 years unto the life of Hezekiah. But we know the word has told us we're going to die one day. So it behooves us to get our house in order. And then another question is, what will our legacy look like? You know, when we pass on, God forbid, if something happens tomorrow, what will our legacy look like? The word of God tells us in 1 Timothy 5:8, but if any provide not for his own, especially for those of his own house, he has denied the faith, and he's worse than an infidel. So 1 Timothy 5:8 lets us know. So we're looking at what the word is saying, is telling us if we don't prepare and have anything for our house, that we've denied the faith. So are you providing peace of mind for your family? We want to ask some questions today. If you passed away today, would your family have peace of mind? So do you have life insurance, final expense, also known as burial insurance? If so, are the limits adequate? Because sometimes you can have something, you know, not adequate for what you need. Could your income be replaced today? If you lost your job on tomorrow and you passed away, if you passed away on tomorrow, so there would be no more income, you wouldn't have a job because you would no longer be here. Would your family continue to move on? Do you have funds set aside for your children, your grandchildren's education? And again, what will your financial legacy look like? So when we look at asking all of these questions, we think about our family. Our families deserve a peace of mind. And giving that to them is not only honoring God and keeping our house in order, it's giving you as well that peace of mind. GoFundMe is not life insurance. You know, people post and you know, God forbid, if something happens, and sometimes you just got to do it. But it's not life insurance. And so when we think about, again, what we can handle today, why do we want to put burden on our families if we don't have our house in order? Proverbs 13:22 says, a good man leaveth an inheritance to his children's children. So we should be endeavoring to leave something for our family members. Two types of life insurance: term life, less expensive, no cash value. It's usually for a duration of time, 5, 10, 20, 30 years. Usually has a higher death benefit, so you can get a lot for term insurance. Sometimes it has like a conversion period where you can convert to a permanent or whole life, which is what we're going to talk about right now. Whole life is the other type of insurance we're going to talk about. It's usually more expensive, but it never changes. It's fixed. It also builds up cash value. So term, once it's gone, it's gone. Whole life, it does build up cash value. I mean, you shouldn't really be getting life insurance to take out loans against it. It kind of, you know, but it does build up cash value. And if you have a time where you need to take out some, you can. Also known as permanent life because it's for your life. It's usually a lower death benefit, guaranteed premium death benefit. So these are only some of the differences. You know, you have to see what works for you. Some people have term, they don't believe in wanting, they don't want whole life. Some people want whole life, don't want to do term. Some people have a combination of both. So at the end of the day, you have to do what you have to do for you and make an informed decision for your household. 5 common life insurance myths. When it comes to life insurance, my employer provides life insurance for me, so I really don't need it. That's true that your employer does, and they'll usually pay 1 to 2 times the amount of your salary, but you might be able to purchase even supplemental through your job. But if you left your job, it's just good to have something outside. If you retire, we're going through this right now with Felix and getting some of his policies in place, and we're converting some. So it really is a myth. You know, yes, your employer does provide it, but it's always good to have something outside of your employer. And so it's wise to have additional couple policies. Like I said, for Felix, we had a couple outside, but we're looking to convert a few more. So it's just good to have that way. If you ever leave your employer, you move away, you leave your job, you still have those other policies that's outside of the employer or your former employer. I can always purchase insurance, life insurance later in life. That's absolutely true, but people are dying every day, the young and the old. It doesn't really matter. And so it's true you can do this, but it really is best to purchase life insurance the younger you are. You're healthy, you don't have issues going on. It's very inexpensive. You can get some phenomenal rates when you're younger. And so putting it off later in life really kind of defeats the purpose of doing it. Not saying you can't do it, you're just going to pay more premium if you wait. I will not qualify for life insurance due to my health. Well, many have this misconception because they're thinking about their health and, I got this going on and ailments with this. And the truth is there's a lot of life insurance carriers out there, life insurance companies that will cover a range of health conditions. High blood pressure, diabetes, even, I have a few carriers where we do guarantee. You don't even have to do an exam, or you don't have to, it's a guarantee. Your premium is a little bit more, but they won't ask you any type of health questions. And so that's not true that you won't qualify. Also, children, grandchildren don't need life insurance. We know that that's not true, because if you purchase life insurance for your grandchildren or your children, it not only guarantees their insurability, but as they grow older, it's gonna be there for them, right? And so it's a great way as parents and grandparents to give them that gift of financial security. We have our children in whole life policies, and two of them that we have, one of them is Gerber. I'm a licensed life agent with Gerber, and just pennies on the dollar. And then when they get 18, it's gonna double. No health questions asked, and this is whole life. This is permanent coverage. And so being able to give them that financial security it's a good thing. And then the last myth we're gonna talk about is it's too expensive. Well, the biggest misconception about life insurance is the cost of it, but it really is very affordable. And I mean, you can find out ways to make it work for you. And here's an example right here. We have a 30-year-old man who doesn't smoke, and to get a $250,000 term, 20-year, is $38 a month. And the woman the same age is 30, because we know that women on average live longer than men. So when you look at it, it's not that expensive. Now, I had a 65-year-old call me the other day that wanted to get some life insurance. And, she just said, look, I just want something to be able to bury me and just leave a little bit something, to my grandkids. And she really thought it was going to be a lot more than what it was, but it wasn't. And so, yes, when you wait longer, it will be a little bit more expensive. It's going to be more expensive than when you do it when you're younger. But it's still a lot of affordability out there. If you're willing to take the time to get quotes, you can find out for yourself it's not that expensive. So that's life insurance. I'm constantly just telling people, you can call me, I can give you free quotes. There's some information, some statistics about, how, a third of people that aren't buying life insurance, it's because they don't like to think about death. My husband is one of those. He's coming around a little bit more, but death is something we have to talk about, right? And so he said, I take it to the extreme, because I have I do obituaries on the side here and there, and I have a folder where my obituary, I've already picked it out. I've picked out some stuff, and it's like, I'm just preparing now. I'm praying I'm stick around for another 50 years. But if I don't, my house is taken care of. And so it's something we don't really like to think about, but we should, and how, what we do right now, and when we, do go, our family's taken care of. That's what we want. We want to be able to give them that peace of mind. So there's my phone number up there. You'll see 828 area code 510-828-1275. You can certainly reach out to me. And here are just some of the carriers that I represent. And there's others. And so those are just some of the ones that you can see that I am a licensed agent with. All right. So again, questions, we can kind of leave that up toward the end. So let's move on to credit. So now we got our life insurance. That's part of our financial houses in order. Let's talk about having healthy credit, the importance of it, because we know right now that we are in a pandemic and we are dealing with, a lot of people, losing their jobs. Their credit is just going in the tanks. And so when we think about the fundamentals of credit, just being educated and having a good understanding of what those fundamentals are is important. So we're going to go through credit one-on-one. So what is credit? Credit is the provision of resources by one party to another where that second party does not reimburse the first party immediately. So instead, the second party arranges either to pay, repay, or return those services, but it's going to be at a higher cost. So usually if you're getting and you're borrowing, you're going to have interest rate, right? And so sometimes you can not have interest rate, but that's really what credit is. This is not credit. Utility bills, even though your utility bills now can be reported on your credit, is still not credit. Phone bills, layaways, this stuff is, accumulative. You're paying these every month, right? So it's not really credit. These are due and you're paying them every month. And there's others too. So let's talk about a credit report. What is a credit report? A record of individuals or companies past borrowing, repaying. Your credit report is going to include information about who you are. It's your credit reputation. It's your credit history. How are you handling money, right? So it's basically saying in a profile how you're handling payments. The three largest credit bureaus, we all have heard of them: Experian, Equifax, and as well as TransUnion. And so our credit history, our credit payment history, and our profile make up the credit report. And so these reports are maintained, and guess what? Some of the information is also sold by these three credit bureaus. Some people have said, well, I thought that the credit bureaus was like the government. No, they're not. They're not the government at all. In fact, they're privately owned. One of them does not even reside in our country. It's up in Canada. So these are private entities, okay? And so they keep all of this information on us. We have a credit profile. The moment you apply for any form of credit, that's the moment your credit profile was created. And so chances are those three credit bureaus have scores on you. And so when we look at these agencies, you ever wonder when you get these pre-approvals in the mail, or you get an offer for this? That's the credit bureau. They've sold your information. How else did those people find out where you live and they want to give you this enticing offer, to get the credit? Well, that's what they do. They collect our information and they sell it legally, but they sell it. And so the three credit bureaus, there's a few others that are out there, but they're real minimal. These are the big boys. And so anything concerning your payment history, concerning any outstanding payments and judgments and collection stuff, bankruptcies, it's all going to be housed with those three credit bureaus.
Evangelist Middleton, do you want them to ask you questions? Wait until ask you questions at the end, or?
Yeah, I'm gonna go through and then we'll open it up for questions in both life and credit. We can just do them all.
Okay.
Okay, thank you. So how does your credit report affect you? You may ask that question. Well, depending on your credit, it could affect your employment. It could stop you from getting a job. Insurance, auto insurance, you need to get your, insured for your car. You have an insurance credit score. Financing, it could prohibit you from getting a good loan. So your credit report and where you stand, your score is going to determine whether you pay higher interest rates, okay, and be denied. So if you have a poor score, chances are you're going to get denied. If you happen to get a loan or they approve you, I remember about 17 years ago, I was so happy. I had moved from Seattle. I was in Stockton about 2 years at the time. And my credit score took a real nasty dive because I had a foreclosure, I was divorced, I had all these other bills and dealing with all of that. And so I was just happy that the dealership gave me a brand new car. I was so happy they gave me the payment I wanted and I got the car. I was happy. I didn't even really pay attention to the paperwork till I got home. And I looked at that, it was 29.99% interest rate. So yeah, you can sometimes still get a loan or get the credit, but what kind of interest rates are you paying? That's the question to ask. So let's talk about what a FICO score is. A credit score is a number generated by mathematical formula that is meant to predict credit worthiness. Again, how you are handling money, pretty much. Credit scores range from 300 to 850. The higher your score is, the more likely you are to get a loan. The lower your score is, the less likely you get a loan. And like I said, if you're able to get a loan, you're going to pay much higher interest rate than somebody that had good credit. So although FICO is the most popular, it's not the only scoring models. There's lots of them out there. You have Vantage, you have Vantage 3. There's all different ones out there. And so most of the time, the lenders are looking at your FICO score. So that FICO stands for Fair Isaac Credit Organization. So that's the big one. That's the big one. Mostly like 85% of the time, it's going to be your FICO score. And like I said, there's other ones, Vantage Score, there's a few other ones that are out there, but FICO is the most popular. How do credit scores work? Okay, we're going to talk about that in just a moment, but you'll see here, 760 and above, you're going to have excellent credit. Okay, 700 to 759, very good. Good is 660 to 669. Fair, 620 to 659. 580 to 619 is poor. And 5 to 579 is very poor. So my 435 was, I guess it was deadly poor, whatever word you want to use. So that's really, if you're in, you can kind of see where you fare out there. It's always good if you can to have very good credit, because anything above 700, like, you're going to be doing really well. I mean, if you're in that 760 range, you're exceptionally well. You're paying very low interest rate, if any interest rates at all. So credit score components, there's 5 areas that make up your credit score. Payment history is the most popular because it's the most popular and it's the biggest chunk of your score. Paying your bills on time, that's going to represent 35% of your credit score. So not paying your bills on time, it's going to negatively impact. Debt ratio, also known as your utilization, that's 30%. Average age of file is 15%. And then mix of credit, 10%. And then we have inquiries, that's 10%. So let's talk a minute about your payment history. Again, 35% of your score is based on how you are paying your payments on your accounts. So good or bad, 35% of your score. So let's say if you had a 600 credit score, if you want to break down the points, take 35% of whatever your score is, and that amount is from your payment history, paying on time. Revolving debt ratio, also known as that's also known as your utilization. So for instance, say if I have a credit card, most credit cards gonna have, they're all gonna have some type of a limit for you, right? So let's just say if I have $1,000 limit and I charge that card up to $900. So I have a utilization of like 90%. That's not good. That's 30% of my score. So that's going to impact my score in a negative way if I maxed out my credit cards. So one of the quickest ways you can get your score up is if you maxed out credit cards, you get that debt down, you're going to see a big increase in your credit score because your utilization should really be around 15 to 20%. I tell people, still 30%, you're still okay, but really 10 to 15% of that is where you want to be. So if you're using it and paying it off every month, it's no problem. It's when you keep keeping it, it's on there and you're not paying it down. So that revolving debt is very important because it's 30% of your score. Average age of your credit file. So how long have you had credit? How long have you had your accounts? That's 15% of your score. So when you go and you open up a new account, you'll see a dip in your score because it's a new account and it's impacting the average age of your credit file. But you keep paying, you pay on time. In 6 months, you start to see your score is starting to go up because you're getting the benefit of a little bit more with paying it on time. So you're having those payments that's on time. And then once you get over a year, definitely 2 years is the most, where you start seeing that advantage. But again, it's only 15% of your score. So you don't have to worry if you have new accounts. The main thing is pay them and pay them on time. Mix of credit, 10% mix of credit. So you have revolving accounts. Usually those are your credit cards. Those balances are going to fluctuate every month. Then you have installment accounts. Installment accounts would be like a personal loan. Maybe you took out with the bank. Maybe you went and got a car and got it financed. Those are fixed amounts. And so you have a mixture. Maybe you have a home. That's another type of, you have a mortgage. So a mix of credit. A lot of creditors like to see a mix. They like to see a mix. But again, that's only 10% of your score. And so if you don't own a home, that's not going to hurt it, And so if you have a mix where you have an installment, maybe you have a credit card, you're good to go. Inquiries. It's 10% of your credit score, but be very careful with inquiries because if you get a lot of them, that can impact your score negatively. Even though it's 10% of your score, it made a difference. I had someone in one day, she tried to go get a car and there were 40 inquiries on her credit report. And her score went down like 70 points as a result of those, even though it's only 10%, but she had 40 of them on there. So every time you get a hard hit, which is a hard hit anytime you go get financing done, whether you go purchase you want to get a home, you want to go get a brand new car, you want to open up a credit card. Anytime you apply for credit, there's going to be what's called a hard hit. That's where your score is going to be impacted by that. Now, soft hits, when you pull your own credit report, right? Some of us might have credit monitoring. I want to go in and see what's going on. Some you can go in there every day if you want to go in there and refresh. That doesn't hurt your score. That's considered a soft hit. It's a soft inquiry. You're inquiring on your own credit. That's not going to hurt. You can do that as many times as you want. It's just the hard inquiries is what impacts your score. So let's go through real quick here. I have 5 facts and fallacies we're going to ask. So closing my unused credit cards will improve my FICO score. So if you close out credit cards, is that going to improve your credit score? True or false? If you said false, you're absolutely right, because closing your credit cards will not improve your score. I learned that 15 years ago. I'm like, I'm paying all these all and close them. I'm done. My score went down like 40 points because I had that age, right? The credit file, when you have that age, even though it's 15%, and I had established all that good payment history, all that went out the door when I closed the account. So my advice to you is, if you want to just pay it off, just cut up the card and don't use it. I don't recommend, though, that you don't use it for a long duration of time, because then the creditor will close out the account because there's no usage on there. You're not using it, so they'll go ahead and close it out. So I recommend, if you want to close, if you want to get everything paid off, just use it occasionally and pay it off. But closing it, it will harm your score if you had very good payment history and you had longevity. It was good. You didn't have any lates. You know, it could really damage your score. So I always recommend don't close. Unless it was so bad, you had all these lates on there and, you know, you really don't care because it's going to impact your score then. But even still, I wouldn't recommend it. Next question. My FICO credit score should be the same at all credit bureaus. It's going to be the same number at all credit bureaus. True or false? If you answered false, again, you are correct. Your FICO credit score is not going to be the same. It could, a couple of them could be the same, but most of the time it's not. And it's because it could be a variety of reasons why they're not all the same, right? Some of them might only report, you might have creditors that might only report to this one every month. It's not reporting over here to Experian and Equifax, but it's reporting to TransUnion. You building it up. That's information on that. So that amount is on there. If it's not on there, that's going to impact. You're not going to have the same scores. So there's a variety of reasons why the scores are not. Plus it's all behind the scenes. You know, the mathematical algorithm, they do this and they do that, and they can just switch up the scores here and there. So no, they're not going to be the same. If they are, it's fine, but they shouldn't all be the same. Next question. When I get married, my credit report is merged with my spouse's. If you answered false, you are once again correct. No, everyone has their own credit profile. I can't have Felix's credit. Felix can't have my credit. Felix has his own profile, depending on how he's done. I was a little, you know, about a month or two ago, he found out he was in the 800 club. I did get a little jealous because I'm like, wow. I mean, 750 is nothing to sneeze at. Still a good score. But he in the 800 club. And I'm like, shoot, I'm married. No, you have your own credit profile. So what you do on your profile is strictly with you. And the last question is, checking my own credit report will create an inquiry at the credit bureau. That will lower my score. You should know the answer because I just gave it to you a little bit ago. It is false. So you can pull your credit report as many times as you want. It is not going to harm your score. Oh, this is the last one. I'm sorry. My annual household income is part of the calculation of my FICO score. So depending on how much money I make, that's gonna impact my score. Is that true or false? Nope, that's false. You're right. So we went through those 5 ones: payment histories, utilization, mix of credit, inquiries, and then your age. So your income has nothing to do with your credit. It has nothing to do with it being calculated. So the Fair Credit Reporting Act specifically states that every item reported on the credit bureau must be reported timely, okay, 100% verifiable, and 100% accurate. The Fair Credit Reporting Act has been around since 1971, gives you as the consumer the opportunity to dispute anything on your credit report. And so if you don't feel that it was reported timely, there's a discrepancy somewhere, you can dispute it. It doesn't matter. Even if it is your account, if there was an amount that's wrong on there, you can dispute that. And so, like I tell people, use the law to your advantage. You know, a lot of times what happens is it may be your account and maybe it got disputed for an amount that maybe you didn't agree with, or maybe the payment status was wrong, anything. If the credit bureaus does not get back to you in a certain amount of time frame, 30 days, really, they have 30 days to respond and update you with the information. If they don't, you can have them remove it and you can file a complaint if they don't. And so a lot of people use this to their advantage because, again, you want accurate information on your report. So the advantages of having very good credit, excellent credit, is going to save you tons of money over the course of your life, as much as $1 million plus, depending on, because think about it, if you buy a house, if you have a higher interest rate over the course of your life, it's a lot of money you're dishing out. You're going to also get royal treatment. You're going to get the best interest rates. They're going to come looking for you. You don't have to go looking for them. It's also going to give you negotiating power. I know this works. We just signed papers yesterday to refi on our house, and National Bank, we've been to it, gave me an interest rate. I shopped around, said, no, I'm going to go with this interest rate because they matched it. Okay, you can keep the business. I know my negotiating power. So when you have good scores, you can do that. Now, the disadvantages of having poor credit, again, you're going to lose a lot of money over your lifetime. Just like it will save you if you have good scores, it will harm you and you will lose a lot of money if you have a poor score. Also, getting a job, right? Security clearance. And then potential strain on personal relationships. Nobody wants to have to deal with, you know, issues financially, right? You know, that's one of the #1 biggest rates with couples is fighting over money. And so if the score is poor, that makes it even worse because you got more money going out the door if you got credit cards and other things. So if you have less than perfect credit, are you tired of it? Are you ready to take the first step? You say, you know what, this year is almost out of here. I'm not trying to go in 2021 with my credit all jacked up. I'm trying to get it handled. You can become a client of RRR Credit Services, and we will definitely help you. Now, we're not your typical credit repair company. I get many stories. People come and they've heard people taking their money and not doing the work and scamming and all of this. We are a company that was, first of all, it's about educating. You know, we want to educate because when it comes to financial literacy, I know for me, a lot of us weren't taught. So it's not our fault, right? But the Bible lets us know when my people are destroyed for lack of knowledge, when I just don't know. So we try to educate is what we do. That's first and foremost. The credit counseling piece. I am a certified credit counselor, and you know, maybe that's an area we need to focus on. Maybe we need to assist you with rebuilding your credit, you know. And then we offer a money back guarantee. Hey, if it doesn't work, you don't feel like you're getting the results, or you don't feel like we're doing what you're doing, we put that there because we know we're going to do a great job. You know, the testimonials are just, you know, they're coming, and I thank God because you hear about what people are going through. And when you come and you can provide solutions, that's another thing we do. We sit down and we talk about what we need to do. We come up with a game plan and we implement it. Now, there's work on your end. I tell people right off the bat, have some patience. It's not, you didn't get there overnight, so it's not going to happen overnight. But if you're patient and, you know, you pretty much do what I say, you're going to be good. So thank you so much. I'm ready to answer any questions you may have.